So there's so many people, I guess, in the audience who has watched Interstellar movie. So Interstellar movie is a movie based on time travel. So in that movie, the director tries to tell there's a fourth dimension to the entire universe, and time travel is some important concept which people don't uh, take it seriously. So after that, I watched so many movies on time travel. So while I was watching all those movies on time travel, I used to always have a question: what is this? Why am I watching all these movies? We are connected to commerce, tax, and all that. Time travel is something to do with science, physics, multiple universes, black hole, and all that. But believe me, all the knowledge on time travel helped us to understand the Supreme Court's judgment and the CBDT instruction, which we're going to discuss in next 45 minutes. So this is going to be the coverage today. We'll discuss old versus new scheme. The main focus will be on the Supreme Court's decision and how CBDT has interpreted the decision. Only we'll touch up the position under old scheme and the new scheme to understand where it is going to be impacting the CBDT instruction and the SSC's interest. And then we'll go and see what is the analysis under TOLA. We'll understand what TOLA is in a few minutes, and what is the virus of notification issued under TOLA. How did High Courts respond on the reassessment controversy? How did Supreme Court respond on the reassessment controversy? How did CBDT took that and gave an instruction to implement the Supreme Court's order? And after all this exercise at the High Court level, at the Supreme Court level, and at the CBDT level, there are still issues which are unresolved, which may pave way for the second round of litigation. And assuming there is no second round of litigation, what could be the defenses available to the SSCs, the taxpayers, by taking into consideration the Supreme Court order? And then we'll have question and answer session, and we'll take up some questions and try to answer them. So before going into understanding the differences between the old scheme and the new scheme, there are certain important pointers. These are very important. These are like instructions to a product. Maybe we all think we need not read instructions and we can start using the product. But once we get into the product, we go back to the instruction manual and try to understand what is it. Like this, like that, this is the instruction manual. These are the important pointers. These are very important for our next 45 minutes of discussion. So the entire controversy settled by Supreme Court is only pertaining to the notices issued on or after 1/4/21. If at all, in your case or your client's case, notices are issued for assessment year 13-14 to 17-18 for reopening the assessments prior to 1/4/21, then this session is not at all required for you. You are covered under the old law, the position which is there on statute books prior to 31/3/21, and the assessment will take place based on that particular law. So the entire issue or the entire session is helpful only in case where the notice is issued on or after 1/4/21 for conducting the assessments for AY 13-14 to AY 17-18. Nothing to worry. We'll cover in detail each particular aspect, but these are the important points which you cannot proceed with if you don't understand them. Second, there may be instances where notices are signed on 31/3/21, but I have received it on 1/4/21. Now the question whether I am covered by this particular Supreme Court judgment or not is still under uncertainty. This has to be only settled with the courts in due course of time. So the tax authorities believe if a notice is issued on 31/3/21, irrespective of the fact it has been received on 1/4/21 by the SSC, they consider it as issued on 31/3/21 and proceed to do assessment based on the previous law. The next important point is, as per the settled jurisprudence, the reassessment has to be done based on the law prevailing as on the date of issuance of notice for reopening of the assessment. Like, take an example. If the notice issued on 1/4/21 for reopening the assessment for AY 13-14 or 14-15, then reassessment has to be done in accordance with the provisions as of 1/4/21 and not as per the law prior to 31/3/21. This is very important. This is fundamental. And only on this point, all the matters have reached High Court. Narendra, you can supplement wherever necessary.
Sure, sir.
The scheme of reassessment.
The scheme of reassessment has undergone.
The scheme of reassessment has undergone tremendous change by Finance Act 21. So the Finance Act 21 has brought so many changes, especially in the entire scheme of reassessment. Finance Act 21 is made effective from 1st April 21. So if the tax authorities are issuing a notice on or after 1/4/21, as discussed a moment earlier, the provisions which are in place as on 1/4/21 has to be applied. Since Finance Act 21 is also made applicable from 1/4/21, the provisions which are amended by Finance Act 21 should have been applied for assessments for AY 13-14 to 17-18. In light of COVID, the dates for issuance of notice under 148 have been extended from time to time in light of the taxation and other laws, relaxation and amendment of certain provisions Act 2020. This is what we are calling as TOLA. Yeah. So why TOLA? The central government is empowered to issue notifications for extension of time limits for issuance of notice. So what happened was, because of COVID, the notices which should have been issued by 31/3/21, they have been extended till 36/21. So the central government, by issuing notification, has extended the time limits for issuing the notices for conduct of reassessment. Ideally, if there is no COVID, the notices would have been issued as on 31/3/20 in some cases and 31/3/21 in some cases. Because of COVID and because of continuous extensions, time limit has been extended from 31/3/20 to 36/21. This was the main issue which has led to the current controversy. So if you see the next point, accordingly, notices under section 148 have been issued from AY 13-14 to AY 17-18 on or after 1/4/21 by virtue of extension notifications. Meanwhile, the FA 21 was made effective from 1st April 21, which has changed the entire scheme of reassessment. So now there are two sets of questions which were subjected to challenge. We'll just see this particular picture and then go back to the questions. So if you see the picture here, till 31/3/21 at the bottom, you can see that the old provisions, that means the situation which is prevalent prior to Finance Act 21, the entire scheme of reassessment under the old law was in effect. That is prior to 31/3/21. If you see on 1/4/21, the Finance Act 21 has been amended. Now, the time limits for conducting of reassessment for AY 13-14 to AS 17-18 was extended till 36/21. So if you see the bottom from 1/4/21 to 36/21, this is the period of overlap. In this particular period, the taxpayer argues that since notice has been issued on or after 1/4/21, the Finance Act 21 should be applied. The department argues, since what has been issued on or after 1/4/21 is a notice for conduct of assessment for previous year, the old law should have been applied. And these are the two questions which are subjected to challenge before various high courts. The first one is, and also in the TOLA, as I said, TOLA has given power to central government to issue notification for extending the time limit. So the central government, apart from extending the time limit to issue notice, they've also inserted an explanation. If you see, this is the explanation they've inserted. For the removal of doubts, it is hereby clarified that for the purpose of issuance of notice under 148, as per time limit specified in 149 are sanctioned under 151, the provisions of section 148, 149, 151, as the case may be, as this stood as on the 31st day of March 21, before the commencement of Finance Act 2021 shall apply. So for all the notices which are issued on or after 1/4/21, the department was of the belief, based on this explanation, the whole scheme will be applicable, because the explanation tries to make the dead law. Why it has become dead? Because the Finance Act 21 has made effective the amendments carried to the old law. Because the Finance Act 21 has made changes to the old law and made it effective from 1st April 21 without any saving clause, the old law is dead. But the department or the central government, through this notification, by virtue of an explanation, try to extend the dead law to a situation after 1/4/21, saying that since notices are issued after 1/4/21 pertains to the period prior to assessments prior to 1/4/21, the whole law should be applied. This particular explanation was challenged before high courts, saying that wherein the central government has power under OLA to extend the provisions of the dead law, especially in a situation where the Finance Act 21 has made effective from 1st April 21, getting the new law into place. So this is the overlapping period from 1/4/21 to 36/21. So during this period, notices were issued for conducting assessment for previous period, and the tax authorities believe that the old law has to be applied because of the explanation in the notification. The taxpayers, based on the settled jurisprudence, went to high courts asking, since notice issued on 1/4/21, no matter for which assessment year it is concerned, since notices have been issued on 1/4/21, the law which was existence in 1/4/21 should be applied. So these are the two questions. One, whether by virtue of explanation to notification, whether central government is empowered to continue the whole scheme, which came to stop after enactment of FA 21. The central government is trying to extend the whole scheme, which has become dead on the advent of FA 21. That is being challenged before various high courts. Immediately when the SSC got a notice on or after 1/4/21, because the tax authorities were right, because in light of the extension notifications, they have continued to issue notices after 1/4/21 because the extension was given till 36/21. So they were issuing notices under 1/4/21, asking the SSCs to file returns and everything. But taxpayers went to courts and said, how can you issue a notice on 1/4/21 without considering the new provisions in place? We'll come to that later, how the courts address that particular point. The second question is whether the notice issued on or after 1/4/21 is to be issued in accordance with the provisions contained in FA 21. So this is okay. You've given a notice on after 1/4/21. I accept it. For a minute, let's assume I've accepted it. Now, since you have given a notice on or after 1/4/21, should you give the notice as per the position which is prevailing as on the date of notice, that is as per Finance Act 21? That is also challenged because there is a difference between the old law and the new law. That is, old law, when I say old law, it is as it is existence prior to 31/3/21. When I say new law, it's after 1/4/21, which was made amended through Finance Act 21. So we'll park the two questions there. We'll come back to the two questions after understanding what is the difference between the old law and new law. Under the old law, I just want to remind you that we are not going to deal substantiatively under what is covered under old law and what is covered under the new law. The entire objective of the session is to understand the Supreme Court judgment and how to proceed way forward. So we are here to understand the comparative study. What is the position in the old law and what is the position in the new law? Only to understand what are the grievances of the taxpayer and what are the issues from the tax authorities. So under the old law, assessing officer has to have reasons to believe. In order to reopen the assessment under 147 to 151, the entire scheme, the initial or prerequisite for the assessing officer is to have reasons to believe. Unless he has reasons to believe that income has escaped assessment, he cannot ask the SSC to file a return under 148 notice. So the prerequisite is to have reasons to believe. But if you see under the new law, that is effective from 1/4/21, there is no requirement to have reasons to believe, but assessing officer should be in the position of information suggesting that the income has escaped assessment. So the entire concept of reasons to believe, which was there under the old law, has been replaced with information suggesting that income has escaped assessment. What is information suggesting income has escaped assessment was defined under 148. Next, if you come to the old law, after having reasons to believe, the assessing officer has to record his reasons, because tomorrow SSC can challenge him and ask him what are the reasons on which you try to reopen the assessment. So it is also a kind of obligation on the assessing officer to record his reasons. Under the new law, the assessing officer has to conduct an inquiry. He has some information suggesting that income has escaped assessment. Okay, just because you have information, you cannot go proceed on the SSC. You have to conduct an inquiry with prior approval from notified authorities under 151. And after conducting the inquiry, you have to collect the information based on the results of the inquiry and collection of information. AO has to follow the procedure under 148A. So this 148A is a new section which came only in FA 21. Before FA 21, there is no 148A. Straight away, after assessing officer recording his reasons to believe, he used to issue a notice under 148 and asked the SSC to file his return of income. On issuance of notice under 148, SSC has to file a return of income. Then he can ask the assessing officer what are the reasons for reopening. The assessing officer has to furnish reasons in reasonable time. Then SSC can file his objections. Assessing officer to pass a speaking order. I need not tell you what was happening under OLA because everyone would be aware of that. So that was under 148. The entire concept of SSC asking reasons for reopening, assessing officer giving those reasons in reasonable time, this has been a result of the Supreme Court's judgment in GK and drive shafts, which is there under the remarks column. I have the citation. So now the entire rationale of the GK and drive shafts is codified as 148A. Under 148A, the assessing officer, as I said, has to first conduct an inquiry. And after conducting an inquiry, he has to give a show cause notice, asking the SSC to come and appear and tell why the assessment should not be reopened in light of the information he has in his possession. So this is something much powerful than the old law. Then assessing officer has to give an opportunity of being heard to the SSC. SSC has to furnish the response to notice. He will obviously say that this is not the information which has escaped assessment under 148 to give me a notice. And assessing officer, after considering the submissions made by the SSC, has to pass an order. There's an inbuilt check here. The order which assessing officer has to pass is to be done with the prior approval by the sanction, by the specified authority under 151. Once the authority, specified authority and the assessing officer believes that they have the information in position which suggested that income has escaped assessment, then they will issue a notice under 148, asking the SSC to file his return of income. And then the procedure which was existed under the old law will continue. So if you see the difference between the old law and the new law, the 148A is very new. 148A comes into play to the help of the SSC to defend his case without getting into 148. Let's take a small example which our office has faced. One of our clients, a group of family, 5 people, have purchased a property in an auction. They got it in an auction. It's a public auction. They participated in the auction. And in that auction, they bought the property for something around 90 lakhs, where the SRO value of the property is at 3 crores. And one of the family member among the 5 people, like we can say the co-owner, one of the co-owner was asked to submit return of income under 148. This was prior to 31/3/21. I'm talking about a situation. So SSE filed return of income saying that I have only a rental income, and based on the rental income, I filed my return of income. Then there was an assessment order. After that, there are so many notices from the department under 143, but SSE couldn't check his mail and he didn't see all those mails. So he didn't submit any information which was asked under 143. The assessing officer has passed an assessment order saying that the SRO value of the property is 3 crores and you have paid only 87 lakhs. Or you do not have enough source to buy a property which is worth 3 crores. Since you do not have enough source, and in the return which you have filed, you have only filed for 3 lakhs, I add the entire amount of investment in the immovable property as an unexplained income under section 68. Why I'm taking this particular case is, if at all the SSC was given an opportunity under 148A, wherein 148A says that I have to give a show cause notice. So in that show cause notice, the assessing officer would have said, boss, you have purchased an immovable property for 3 crores. You do not have enough source. So I'm trying to reopen your assessment. Please file your objections. Then I would have jumped into the scene and I would have said, this is a co-owner property. I'm not the only owner. The 4 other people along with me. So, and the property, even though SRO value appears at 3 crores, we have purchased it in public auction from an asset reconstruction company for 90 lakhs. And I have enough source to prove 90 lakhs by 5, 18 lakhs. And whatever information is in your position is not worth reopening. And based on those objections, the assessing officer will take the prior approval of the officer, concerned authority under 151. And there is a heavy chance he would have dropped the entire reassessment procedure. Without this in place, under the earlier scheme, they directly issue a notice under 148 and they conclude the assessment. So this kind of case study gives you an example to understand what is the power of 148A. So the taxpayers who were served with notices on or after 1421 were pitiful of this, because the department thought after 1421 also the old law was in prevailing. They issued notice under 148 straight away, asking the SSCs to file return of income. The taxpayers went to high courts and said, boss, you have given notice on or after 1421. On or after 1421, 148A is on the statute book. Once 148A is in the statute book, you should have followed the procedure as 148A, and you should have given me a show cause notice. You should have taken my objections, then passed a speaking order. Without getting into 148A, giving a notice under 148 straight away based on the old law is what was being challenged. The taxpayers' grievance is, okay, you have issued a notice after 1421, but you have not followed the procedure which is existence on or after 1421. Apart from this, there is also change in the time limits for reopening the assessment. Under the old law, if the income escaping assessment, IEA means income escaping assessment, is less than 1 lakh, then assessment can be opened for 4 years from the end of relevant assessment year. RAY is a shortcut for relevant assessment year. So under the old law, if the income is less than 1 lakh, the assessing officer is empowered to reopen the assessment for 4 years from the end of the relevant assessment year. If the income escaping assessment is 1 lakh or more, then he has power to open the assessment for 6 years from the end of relevant assessment year. There is also a special provision for situations where assets are located outside India. Then assessing officer is empowered to give notice to reopen the assessment for 16 years from the relevant assessment year. So there's nothing to remember these points because this was the position under the old law, and under the new law, it has completely gone for a change. Under the new law, remember the finance minister's speech for introducing the new scheme on 147 to 151. They said we do not want to burden the taxpayer. So we are reducing the time limits and we are bringing more rational into the time limits under 149. So with that objective, the amended 149 says if the income escaping assessment is less than 50 lakhs, then AO is empowered to open the reassessment, to do reassessment for 3 years from the end of relevant assessment year. If it is more than 50 lakhs or more, then he has extended time period of 10 years from the end of relevant assessment year. So this is also the change in time limits is also a big confusion, big issue before the courts. So this is the extension of time limit. We have read the explanation which was subjected to challenge. So this is a table which gives you an idea how the time periods have been extended. So there was a notification on 31/3/20, the first one in the table, which extended the time limit to issue notices to 36/20. And after that, there's a notification on 24/6/20, which has given power to extend after 31/3/21. So till here, the story is good. But what happened on 31/3/21? There was another notification dated 31/3/21, which extended the time limit, erstwhile time limit of 31/3/21 to 34/21. Recall our discussion that with effective from 1/4/21, the Finance Act 21 has come into play. And there is also another notification on 27/4/21, which further extended the time limit of 34/21 to 36/21. So effectively from 1/4/21 to 36/21, the tax authorities have given a power to issue notices for reopening the assessment. The story is fine till this point of thing. Everyone is fine with the extensions because considering the COVID situation where no one can step out of the house, either the officer or us, they have given the assessing officers, the tax authorities, an extension of time. But what they also have done by virtue of this notifications, especially after 31/3 and 27/4, the two notifications, they've inserted an explanation saying that since we are issuing the notice for previous assessment years on or after 1/4/21 till 36/21, the old laws will be continuing to operate. This explanation was challenged. On one hand, when the legislature consciously has introduced or enacted the Finance Act 21 from 1/4/21, how can the central government, by virtue of a notification, extend the dead law? That was the first challenge. Simply, the entire situation would have been under control and this session would have not taken place if the Finance Act 21, concerning the provisions from 147 to 151 have been made effective from 1st July 21. If that was the situation, everyone would have been happy. We do not know the reasons, but it was a conscious choice with the legislature to enact the Finance Act from 1/4/21. On the other hand, government is trying to make the old law effective through a notification, which was challenged. So what is the challenge? Why was the notification is challenged before various high courts? Immediately, the moment they got the notices, everyone rushed to high courts. The main challenge was whether the explanation provided through notification is valid, because what is given under TOLA is only the power to extend the timelines to issue notice. How can you take that power to such an extent where you give an explanation to extend the old law, which is dead? That was the challenge. So you have clearly crossed your lines. The next one is whether the government under delegated legislation has power to enforce continuation of old provisions. Yeah, this is what. Whether the government is having power to do that too through a delegated legislation. Delegated legislation meaning the notification. If at all the government's intention is to continue the OLA, the legislature's intention is to continue the OLA, they should have made it as a part of the TOLA Act, saying that for all notices which are issued on or after 1/4/21 to 36/21, the whole scheme of reassessment will apply. Or they should have deferred the enactment of Finance Act 21 qua the reassessment provisions from 1st July 2021. Both the things have not been done. Don't know why they have not done. Now, the next question is whether issue of notice under 148 on or after 1/4/21 for the assessment year 13-14 to 17-18 under old provisions is also valid. These were the three questions. There are other questions, but these are three questions on which the matter reached various high courts. There's only one judgment, the Chhattisgarh High Court in Palak Khatuja, which has given in favor of the revenue. They said by effect of notification, that is the notification 31(3)/27(4), the individual identity of section 148, which was prevailing prior to amendment and insertion of 148A, was insulated and saved up to 36/21. Clearly, the High Court has read something which is not there. The High Court said, yes, the central government is within its power to issue an explanation extending the OLA, but all other high courts seem not in agreement with the Chhattisgarh High Court. If you see the Ashok Kumar Agarwal, Allahabad High Court, Rajasthan High Court, Calcutta High Court, Bombay High Court, and Madras High Court, all of the high courts said revenue could only initiate reassessment proceedings on or after 1/4/21 in accordance with the substituted law, not in accordance with the old law, which the explanation tried to save. In Manmohan Kohli, the Delhi High Court has made an extensive analysis on this particular point. It's a judgment worth reading. It has everything covered in that particular judgment. It's a wonderful judgment. And it has said the central government was empowered to issue notification for extending time limits for completion of actions laid down in specified acts, but was not empowered to postpone applicability of provisions enacted with the legislature. The High Court said, okay, you have power to extend the timelines. You can extend from 31(3) to 1/4, from 1/4 to 36, from 36 to, if necessary, 39. But you cannot in any way extend the applicability of dead law. That is the old scheme. That was what the Delhi High Court in Manmohan Kohli has clearly said. So with this particular judgment, all the taxpayers in the country were like happy because all the notices which were issued have been bad in law. Revenue rushed to Supreme Court. Supreme Court, after considering all the aspects like the different High Court judgments, the revenue's plea and the SSC's plea, has tried to solve the issue in a different manner. These are the extracts of the judgment. Section 147 to 151 has been substituted with the Finance Act 21 in order to achieve the ultimate object of simplifying the tax administration, ease compliance, and reduce litigation. The court said new provisions substituted by FA 2021 being remedial and benevolent in nature and substituted with a specific aim and object to protect the rights and interests of the SSC, respective high courts have rightly held that the benefit of new provisions shall be made available even to past assessment years if notice issued on or after 1/4/21. We are in complete agreement with the view taken by the various high courts in holdings. So the Supreme Court said, yeah, whatever High Court said is correct as far as notices which are issued on or after 1/4/21. The law which is there on statute book has to be applied. You cannot ask for implementation of the whole law. However, in respect of notices issued after 1/4/21, revenue cannot be made remediless and the object and purpose of reassessment proceeding cannot be frustrated. this is where Supreme Court acted like a big brother. They, instead of trying to tell this is wrong, this is right, they made it a situation like win-win for both the parties. The court said revenue has issued notice under old provision under bona fide mistake. What was the bona fide mistake? The bona fide mistake was, by virtue of explanation, the OLA continues to be in place is what the department thought, and with that thought in the mind, they issued notices on or after 1/4/21, and that, though it's a mistake, it's a bona fide mistake. That was what Supreme Court said. Same out not to have been issued under old provision, and same out to have been issued under the amended provision. And some leeway must be shown in that regard, which the high courts could have done so. And then it passed the order with the following directions. They said, recall the discussions what we had when we are talking about the old law versus the new law. Under the new law, we said there is a particular section 148A, which makes it mandatory for the assessing officer to issue a notice. But after 1/4/21, the tax authorities have already issued notices under 148, thinking the whole scheme is in effect. So what Supreme Court tried to say is, notices which are issued under the old law, under 148, has to be considered as show cause notices, which should have been issued under 148A under the new law. So they have substituted the notices under 148 with the notice, show cause notice under 148A. And as I said, in order to issue a show cause notice, even under 148A, there is a requirement of conducting an inquiry. That requirement of conducting inquiry has been dispensed as one-time measure for all the cases where notices have issued after 1/4/21. They said, okay, under new 148A, you should have done inquiry, but you have not done because you were under the impression that old law is applicable. That was a bona fide mistake. Since it's a bona fide mistake, I'm trying to make this correct. So whatever notices you have issued under 148, I will treat them, or I will deem them those issued under no show cause notice under 148A. And what about the inquiry? I am dispensing of that inquiry. There is no requirement for conduct of inquiry for all the notices which have been issued on or after 1/4/21. This is a one-time measure for all going forward cases. They should do the inquiry, and then they should issue a show cause notice. And once this is done, like the show cause notice under 148A is being the notice under 148 is being substituted with the show cause notice under 148A. After getting the objections from the SSC, the AO should pass a order under 148 small d appropriately and issue a notice under 148 again. This issue of 148 is different from the already issued 148, because already issued 148, the Supreme Court has to deem it as a show cause notice under 148A. And then it made an important observation. We're only talking about this aspect. All the defenses which may be available to the SSC, including those available under 149, and whatever rights and contentions which may be available to the SSC and the assessing officer under FA 21 shall continue to be available. We are not touching them. We are not commenting upon them. Our job is only to set right this issue that after 1/4/21, the department should have followed the new law, but it has genuinely, with a bona fide mistake has been done. So in order to repair that mistake, we are trying to fix it by saying that notices issued under 148 has to be deemed as show cause notice under 148A. That's it. We're not going to touch any other aspects. So in order to avoid appeals in remaining cases, like in the introductory remarks made by Vice Chairman, he said there are some 90,000 cases which are pending at various high courts. So in order to avoid appeals in remaining cases, the Supreme Court, in excess of powers under Article 142, has passed this particular order. Now, whether Supreme Court is empowered to invoke 142 for this particular circumstance is not a discussion at this forum. We can have a separate discussion on that. But Supreme Court has invoked the powers under Article 142 and said all the judgments which are lying at different high courts will be covered by this judgment. They said this judgment is applicable to Pan India. Immediately after Supreme Court's judgment, the CBDT has come up with instructions. And now the time travel knowledge will come into play. So what is a CBDT instruction? CBDT said there is a judgment of Supreme Court. Now we are giving instructions to have a uniform practice across the country. So CBDT said SC judgment applies to all cases where extended reassessment notices have been issued, whether or not challenged. Right? This is clear. SC has upheld the views of High Court. The benefit of new provisions shall be applicable to past assessment years. Yes. And then said in para 6.1 of the instructions, SC decision read with time extension provided by TOLA will allow extended notices to travel back in time to their original date when such notices were to be issued, and then new section 149 is to be applied. So this is the interesting point. What the CBDT said is, yeah, we also agree that in light of the Supreme Court's order, for 1/4/21, for notices issued on or after 1/4/21, the old scheme will not be applicable. The new provisions will be applicable. And then they didn't stop there. They said the new section 149, which had revised timelines, like we said, 4 years have been changed to 3 years, and 50 lakhs has come into picture. All those revised new timelines will travel back to that set date where a notice would have been issued and applied. This is now the biggest point of concern. I'm not going to touch upon that now. We will go to the separate slide on unresolved issues. First, let's assume that what CBDT said is correct for time being. For next 2-3 slides, let us assume para 6.1 is a right way of interpretation. And then we will see what in what other way the Supreme Court's judgment read with CBDT instruction has to be applied. For time being, as I said, we're proceeding further by accepting the proposition of the CBDT under para 6.1. The CBDT continued to say, in respect of assessment year 13-14, 14-15, and 15-16, notice under section 148 can be issued only if such case is covered under 149(1)(b), that is, where information suggesting that income escaped assessment exceeds 50 lakh. In respect of assessment year 16-17 and 17-18, since these are within the time of 3 years, under the new section 149(1)(a), the assessments can be made. This is how the CBDT interpreted. So like this, if you see assessment year 13-14, if income escaped assessment is more than 50 lakhs, then the notice can be issued on or after 1/4/21. Because if you take 13-14, the due date for issuing the notice under 148, the due date for issuing the notice under 149, since the income has escaped assessment is more than 1 lakh, it would have been 6 years under the OLA. So if you add 6 years for 31/3/2014 plus 6 will be 31/3/20, and 31. So the notice would have been issued by 31/3/20, and since it has been extended till 36/21, so even a notice issued on or after 1/4/21, still that assessment is covered under the Supreme Court judgment only in case where the income escaped the assessment is 50 lakhs, not 1 lakh. Remember, under the old law, for getting the extended time period of 6 years, the monetary threshold was 1 lakh. If income escaping assessment second row, if you see, if income escaping assessment is 1 lakh or more, then 6 years from the end of relevant assessment. But now that Supreme Court said, since you have issued notice under the new law, that is on or after 1/4/21, the reduced time limit of 149(1)(b) has to be applied. And only if income escaping assessment is more than 50 lakhs, then assessment year 13-14 can be reopened. Then people may also think, why not assessment year 12-13? Because if you take assessment year 12-13 and income has escaped assessment exceeding 50 lakhs, can they still issue a notice now? Because under the new law, it's 10 years. But it's not possible because the new law has a provision to section 149(1), which says that if a notice for reopening the assessment cannot be done under the old law, the same cannot be done under the new law. Since for assessment year 12-13, even under old law, 31/3/19 is the 6 years time limit, has already exhausted. The same cannot be now revived under the new law, even though the income is exceeding for more than 50 lakhs. So assessment year 13-14, if the income is escaping assessment is more than 50 lakhs, as per the CBDT instruction, reassessment can be done in light of the Supreme Court's judgment as interpreted with the CBDT. Similar situation for 14-15, because but the income has to be, IEA has to be more than 50 lakhs. Similar with 15-16. 16-17, there is no requirement of time limit because it's way within the time limit. There is no requirement of the income escaping assessment monetary limit. Same with 17-18. This is as per the CBDT instruction. 13-14 can be done, 14-15 can be done, 15-16 can be done if the income escaping assessment is more than 50 lakhs. 16-17, 17-18 also can be done. As I said, this is only based on the CBDT's interpretation. There is a different interpretation which is going in circles now, which will make a huge possibility for the second round of litigation, which we will discuss later. Now, what are the other instructions? Given the procedure to be followed, they said extended reassessment notices are deemed to SCNs under 148B. That's what we said. And then AO shall provide information within 30 days, that is by 2/6/22. Because already notices which are issued under 148 by virtue of the Supreme Court's order has to be deemed as a show cause notice under 148A small a. And now the AO is required to give what is the information which he is in position which suggests that the income has escaped assessment. This has to be given to the SSC by 2nd June. Then SSC has to respond to that show cause notice in 2 weeks. In the example we have taken, I will go back to the assessing officer and say that this is a co-owner property. You have tried to assess me on the entire income. So that is the objection you can file. And then AO, based on the facts, he can take a call, either accepting the submissions of the SSC and dropping the possibility of reopening, or can proceed with issuing a notice under 148 again. So this is as per the CBDT instruction. Now let's come to the second line of interpretation, which is there in the market. The next line is, people started, though it appears true on one side, but let's see what is the issue and then we'll go back to our comments. So if you see the table here, the taxpayer's assertion is, what is the due date for issuing a notice to reopen the assessment for 13-14? So if it is 6 years and income escaped assessment is more than 1 lakh, then 31/3/2014 plus 6 years will give us 31/3/2020. But now notice is issued on or after 1/4/21. Now the taxpayer started arguing that if a notice has been issued on 1/4/21, I can go back only to 6 years, because even though the new law gives me an opportunity to go back to 10 years for the assessing officer, because the provision to section 149(1), which says that I cannot issue more than what I can issue for under the old law, you could have maximum invoked reassessment for AY 15-16, because 15-16 because 1314 and 1415 would have been exhausted by 31/3/21. So only assessment year 15-16 can be done if the income escaping assessment is more than 50 lakhs by virtue of a notice on 1/4/21. So since as on 1/4/21, the time limit for issuing a notice for 1314 and 1415 has already exhausted, I'm not going by TOLA. TOLA is not applicable to me. Though the high courts have said extensions under TOLA are valid, only explanation is invalid. There is an argument that as on 31/3/21 and as on 27/4/21, when the old law was not in effect, how can a notification give the power to extend the time limits? So that was the line of argument taxpayer started taking. And if I don't consider TOLA in place, then since you have given a notice on 1/4/21, the maximum period you can go back and do the reassessment is only for assessment year 15-16 and not for 13-14 and 14-15. Narendra, is that right?
Yes, sir.
Want to add something?
Yes, sir. If you see the for the AY 1314 and 1415, generally time limits expires on 31st March 2020 and 31st March 2021. But by virtue of the section 3 of TOLA, they extended the time limits from 20th March 2020 to 30th June 2021. So the question that arises is whether the assessing officer is empowered to issue notices under the new provisions on or after 1st April 2021 under the new law to the old assessment years. That question is very clear that when you're issuing the notices for the reassessment, the law existing as on the date of issue has to be followed. That is clear. However, when you're issuing the notices for 1314 and 1415, whereas the original time limits expires on 31st March 2020 or 31st March 2021. However, they've extended the time limits from 20th March to 30th June 2021. The thing is, if you are issuing the notices for this time, how can you issue the notices under new law, which means that you are issuing the notices under new law as on 20th March 2020, which is not there. Which means that if you are issuing the notices for the AY 1314, you have to issue the notice by 31st March 2020. So which means that you are applying the new law as on 31st March 2020, which is not there. So it is impossible to issue notices for those assessment year under the new law. This is the line of argument made by the taxpayers before the tax authorities. But we need to consider how courts will interpret. If that is the interpretation given by the Supreme Court, then the whole judgment given by the Supreme Court will not be applicable, because for those assessment years only the taxpayer or the tax authorities have went to Supreme Court, for which the Supreme Court has given the judgment. However, if we take this argument, the Supreme Court judgment will become null and void and is not applicable.
So essentially what they have tried to do is, by virtue of an explanation, they tried to postpone the applicability of the old law. And now with the help of CBDT instruction, they have tried to take back the new law to a situation when it is not effective. So they tried to apply it as it is in retrospective nature. So this is one point which has not been resolved. So rightly said by Narendra, if this particular line of argument is taken forward, then there is no point for the revenue to go to Supreme Court, and Supreme Court need not play a big brother role. Yeah, if you strictly interpret the law, whatever the taxpayer's assertion, it's valid. But the para 6.1 of the CBDT, that's the reason they said we have to travel back the 149, the new 149 has to be traveled back to that position, and then you have to read it as if it is in existence as on 31/3/20. So what is being tried to postulate in CBDT's notification is the new 149 has to be taken back along with the notice date. What we have saved under TOLA is the extension date, even though the notice under 148 has, even though notice under 148 has been extended in multiple notifications till 36/21. When I issue a notice on 1/4/21, it is being understood that the notice has been given prior to 31/3/21, though it is issued on 1/4/21. Because of the extension, we are saying it is issued on 1/4/21. It is as good as it was extended on 31/3/20, the original date. And now on that date, if you see 149, a different 149 is there in picture, not the 149 as amended in Finance Act 21. The notice, also take the new 149 along with you and then try to do assessment. And that is how the CBDT has come up with this particular interpretation, that assessment year 13/14 and 14/15, 14/15, 15/16 is already saved. So 13/14, 14/15 can be done if the income escaped assessment is more than 50 lakhs. So similar logic they try to explain, use it for 16/17 and 17/18. So these are the two issues, or maybe one issue, which is unresolved as on the date. And we are very sure this is also going to be challenged before various high courts and then eventually go to Supreme Court. And maybe Supreme Court again tries to use the power under Article 142 to do some big brother's job. So now we have understood what is the CBDT's interpretation and what is the interpretation of the taxpayer after the judgment of Supreme Court and the CBDT's instructions. Now let's understand what are the defenses available, because the Supreme Court said we're only deeming the notices under 148 as show cause notice under 148 capital A, and we're not touching upon any other. I still continue to apply. So let's see what are the different defenses available to the assistant officer. This comes under the ambit of way forward in the title of our presentation. So we are done with the incisive analysis, and now we will talk about the way forward. One of the aspect and the way forward is the unresolved issue. Maybe if at all the high courts again accept the taxpayer's view, and then matter goes to Supreme Court, and Supreme Court rules in favor of the department like what it has done now, then we would have a similar session again later point of time. Now let's assume that we are happy with the CBDT's interpretation, and we'll go with the CBDT's interpretation. Now then comes what are the defenses available. So as we said earlier, the old law has a concept of reasons to believe, whereas under the new law, it is the information suggesting that the income escaped assessment. So all the notices which are given on or after 1/4/21, based on the old law, based on the belief that the old law is applicable, they would have had the reasons to believe. Now this reasons to believe has to be synced with information suggesting that income has escaped assessment. If that reasons to believe is not matched with the information suggesting that income has escaped assessment, which was laid down under section 148, then this would be the first line of defense available for the taxpayer, saying that, see, whatever reasons you have given, that is not falling within the ambit of information suggesting that income has escaped assessment, and so you cannot reopen the assessment. So this should be forming part of your objections for the show cause notice, which was already issued in form of 148. So this is the first point. Second point, there is also changes done by Finance Act 2022 for the scope of information suggesting that income has escaped the assessment. So if you see the struck down parts, these are the changes which are made by Finance Act. 2022. Now that a notice has been issued on or after 1/4/21, and Supreme Court said the law applicable as on 1/4/21 should be applied. Now, for the tax, you cannot make assessment under the amended provisions of Finance Act 22. You have to make the assessment under the unamended provisions as per Finance Act 2021. So if that information based on which the notice was given by the assessing officer is not flagged, then the second line of defense would be still it was removed only from Finance Act 2022. And now that we are dealing with the situation where 1/4/21 is in play, Finance Act 21 is in play, since it is not being flagged, I can very well say that this is not an information escaping the assessment. And any final objection by C&AG, this was there as per Finance Act 21, this was struck down and replaced with any audit objections as per Finance Act 2022. So if it is now any audit objections which is forming part of the reasons to believe oblique information suggesting income escaping assessment, then the third line of defense would be, since this is not a final objection arising from a C&AG audit, this will not fall under the ambit of information escaping assessment, and you cannot do the assessment. And there's one more point, this fourth line of defense. AO need to satisfy that the amount of income represented in the form of asset exceeds 50 lakhs in order to go beyond 3 years. As I said, in cases where income escaping assessment is more than 50 lakhs, under the Finance Act 21, it said that income escaping assessment should have been represented in the form of assets, and then only you can consider that as an information escaping assessment. Under Finance Act 2022, they have added certain other phrases to the ambit, to the apart from the asset. They said where investment, asset, or expenditure in relation to any event or occasion has been made in more than 1 year, notice under section shall be issued for every such year. So if you see on a standalone basis FY 21, then asset is only appearing on the statute book. Only by virtue of an amendment through FY 22, investment and expenditure have been added to the scope. So if the information which is in possession of the assessing officer relates to an investment or expenditure which is exceeding more than 50 lakhs, then the taxpayer can very well lay his defense that since only asset was covered under Finance Act 2021, you cannot give, or you cannot reopen the assessment under investment or expenditure. So this is what we have for this session. So now I have some questions in chat box. Let me see. Okay, these are just the PPT to the participants. Okay. Yeah. Sika, I think there are no questions.
Yes, I think
I understand this is very technical because the situation is like that, the concept is like that. So I tried to put it as simple as possible. I don't know whether I've done justice or not.
such a comprehensive presentation and with
Yeah.
so much of details.
Yeah.
I really thank you and also Mr. Narendra for such a detailed presentation and so much explanation. I think there is just now one question that has come is jurisdiction issue of 50 lakhs above. Normally ITO has jurisdiction of income below 20 lakhs for IT and in corporate cases 30 lakhs. Then how the ITO can issue notice of 148A basing on information which shows 50 lakhs above income expanded. Escape, sorry. Yeah.
Okay.
Should I read it again?
It's there on my screen.
Okay.
It says jurisdiction show 50 lakhs above. Normally, ITO has jurisdiction of income below 20 lakhs for IT, and in corporate cases 30 lakhs. Okay, then how the ITO can issue notice 148A basing on information? No, I don't understand where this 20 lakhs and 30 lakhs have been picked. But now the revised 149 says if the income suggesting that income has escaped assessment is more than 50 lakhs, then the assessing officer has power to reopen the assessment for 10 years. So that's you want to add something?
Yes, sir. See, for issue of notice under 149, I mean, a assessing officer has the power to issue on notice under section 148, not just ITO. So even if ITO doesn't have power to issue notices by way of internal instructions of 20 lakhs or 30 lakhs, the other income tax authorities, I mean, assessing officers have the authorities, whether it is ACIT or DCIT, resident commissioners, they have the power to issue notice under section 149. It's a simple.
Okay, thank you. I request the participants, if they have any questions, kindly put in the chat box or Q&A.
Or they can also send us a mail. I've put my email ID on the last slide.
Yes.
So they can send us their questions, which we'll be happy to answer.
If you have any questions, maybe if you want to ask separately, you can forward on the email mentioned on the screen, or you can forward to IICC. We will forward to the SBS. And, with this, I request CN Rao sir if he want to add something. Sir, if you want to say something.
It's okay. In fact, they tried to do justice to the time we have given to them. Okay. However, this is a tricky thing. Still, there is a lot of gray area. I think time only will clarify those things. Am I right, Harsha?
Agree with you, sir. Completely.
Yeah. Okay, right.
Thank you, sir.
Thank you. Thank you.
I really thank both our esteemed speakers, CA Shri Harsha and CA Narendra, for such a detailed presentation and so much information for our members. And as members are posting that they will post later, they can send directly to Harsha sir or to IICC, to speakers or to IICC, and we will forward the detail, your queries to SBS. So we really thank SBS for their support as our knowledge partner for this session and supporting IICC for this session. And we'll be circulating the PPT to all our participants and to all our members as well. In case if anybody has not attended, but they can have the PPT and they can go through that. So thank you so much. Thank you, sir.
Thank you, Shikha. Thank you, Narendra, sir.
Thank
you.
Thank IICC on behalf of SBS for giving us the opportunity.
Thank you. Thank you.
Thank you.
Thank you.